Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we are now at August 3rd, 2020, 5:35 p.m. Central Time. A little pullback in the stock market. Keep in the back of your mind, we had a good gain tomorrow. Monday rallies often lead to a Tuesday attempt at a pullback. We'll see if we get that. Energies are breaking down a bit right now. We'll see if they have any oomph to them left. I was surprised that nat gas was as strong as it was today, but they're saying hot weather for August is now on the cards. So the Weather Service has completely flipped itself 180 degrees, gone from moderate to normal to hot now. In the grain markets, we're going to see if China can do more buying or not. Bonds and notes getting a little bit of a bid here. We're in a phase here where the Eurocurrency intraday had a big rally. The dollar, as you can imagine, well, actually it was the dollar that had a big rally, the euro a big pullback, and they're trying to stabilize right here. I had been looking for this to occur. For my subscribers, they know that, and they know what we did with the positions in front of it. I also think copper got too cheap. I think 283, 284 looks cheap right now, and that's where it got intraday. But let's go to the S&P. For the week so far, we're up 22 points. We're not that far away on a closing basis from the all-time high. We're under 100 points away. Would you have ever thought it back in March off this crash that this market would be almost relentless on its move to the upside? We've had a few breaks. This was the biggest one just recently where we went into a pause and the market has just continued its way to the upside. Now, the market, when we look at it, you can call this a consolidation move with the market trying to move back to the upside. If I put on the chart, and let me get to it and get it there, there's the swing line. We have a pattern here of a lower low and a higher high. That is not a trend. Doesn't mean that you can't see the market's been going up, but as a trader, I look for that swing line to be in a trend. It's crucial, because otherwise, where do I put stops if I don't have an embedded reading? Embedded means off momentum, you have done something where you've locked in a trend. Well, without that, this keeps me away from the market. If the market doesn't line up the way that I think it should, I tell my traders, you don't do anything. There's always another bus. There's always another trade. The trades I don't want to be in are the ones that don't line up. Even when they do, it's no guarantee they're going to work. So you got to have the risk you can control. Things have to line up for you, and then you're trying to catch your trade. What's very clear, and it's been this way, and I think I've been relentless is the right word in saying it and pointing it out, is this market is staying over the 18-day average of closes. That's acting with the bullish bias to keep things together. That is what the market's looking at. The next thing it's looking at, it's paying great attention to the upper Bollinger Band. It is not bursting out over it and running away. So think of it as a fence. The market gets up to it, and I think the pros take money off the table. If we take a look, this is how you looked on Friday. Today, the Bollinger Band was 32.99. You didn't quite hit it. If you hit 32.95.50, but I'm telling you, that's where I expect the resistance, and I don't see a trend. I see a bias to the upside without any question, and I see an overbought market that is not embedded. Embedded occurs when both the red and the blue lines are going sideways over 80. You are not doing that at all. They are over the 80 level, but they are not going sideways. You need more days to do that. So as I take a look at the NASDAQ, in the NASDAQ we have a pattern of higher lows, higher highs. What number did it go up to and stop? Well, if we take a look last Friday, here's the 31st, you didn't quite get there. You got to 10,939. I would keep telling you, the trend is up, number one, unlike in the S&P. You have higher lows, higher highs. I'm going to look for that to be your resistance. You went up, and today you're fighting at that number. Agreed? So until you take out back down here, which is this low, and that low specifically is 10,502.75, you've got the pattern higher lows, higher highs into that, but you're overbought. Still not interested. In the Dow, this is called a pipe, P-I-P-E. That occurs when you start going sideways and you narrow in these Bollinger Bands. typically what happens is you spin around and you get super frustrated. You go up, you don't follow through, you go down, you don't follow through, and that's pretty much what's happening. It's a consolidation phase. Pay attention to them. You tried it right here in the Russell, then you widened it out. You've been paying attention on breaks to the 18-day average, but you're not able to hold a definitive move to the upside other than grinding higher, and the combination is what I'm looking at. Now today, the 18-day average of closes in red got over the 200. That is a bullish event. So I think moving average traders will look at that, and it would not surprise me if they want to make a run at the upper Bollinger Band off of it. What else? If we look at the momentum here, both numbers are over 80, but you can't count Tuesday. We don't know where it'll finish. So we go back to Monday, both numbers over 80. They were not both over 80 on Friday. You just have an overbought market. Overbought, bullish bias, resistance 1526. Vix Cash. The VIX has kept its bearish embedded reading. That tells you that there's a bullish tint to all the stock indices. That's the way I look at it. If this market falls back to this number, 2187, or wherever the Bollinger Band comes in the morning, and it goes down there, I expect the professionals to write puts looking to get back to the 18-day average, which also means I'm going to look for the stock market to stall a little bit on that upside. As we're at the bond market, I have divergence. First, I have a market that is here overbought. Now the momentum, you can see it shifting, and now it's actually pointing down. I have the trend up, higher lows, higher highs. I keep hitting the upper Bollinger Band, and each time you hit it, the pros are taking, I think, some money off the table, coming back in on the breaks. Now, I don't like buying overbought markets in my recommendations for my clients. So I tell them, it's one of our filters. Nah, we'll do something else. And if there's nothing to do, there's nothing wrong with keeping your money in your account and not deploying it till you think there's something to do. Everybody seems to think you got to be in these markets all the time. You don't. 10-year notes. Well, you widened out this pipe a bit. You pushed on it, you're backing off, but you have the embedded reading. That's very different. So until that's lost, I look for the pros on pullbacks to continue to buy, and I look for them to pop out at the upper Bollinger Band and buy and pop out until the red line closes under 80. In the dollar index, I think the market's seeing some short covering, and tonight if the market's up, you probably, at least intraday tomorrow, you're going to lose the embedded reading. So it's a warning sign. Now today's rally carried up to 93.98. It broke the pattern. So I'm going to take and get rid of this. I'm going to have an arrow pointing up, and I wanted to show you that. I had it there just to give you an idea. But that's a higher high and a lower low. You've gone into a pause in the downtrend. I did a story today for Bloomberg's TikTok, and it's oral, so it gets passed around to hundreds of thousands of people. And I explained that they're asking, is the dollar depreciating? Well, certainly falling in value, there's no question. Why? Market psychology. It's as important as fundamentals. And right now the market's thinking, well, Europe, they were first into the COVID ahead of us. They're coming out of COVID. They too have their testing. They're throwing money at markets. Maybe, just maybe, with the valuations of the U.S. stock market and the depressed markets they had there, money's going to flow to them and their currency. It's part of the game. I was talking about that. And you had the opposite in the euro. First off, you lost the embedded reading. So if we come back on the close today, you had lost it. How do you lose it? Any number over 79. Now, it's got to regain it very quickly, otherwise that number drops even further, which you see it's doing. Regaining means it's got to come up to do that. It's need a big rally tomorrow to stop the market from saying, aha, I'm in a correction. Could the market be headed back to the 116 level? It certainly could. If you keep the embedded reading lost by the close of business tomorrow, my work, the way that I teach, says the market owes a challenge of wherever that 18-day average comes in, and each day that number will rise a little bit, so price and the 18-day average should make a run at each other. In the Japanese yen, you fell back right to my line in the sand, that 18-day average of closes, and held it. And all you did is bounce now tonight. You're out of your uptrend. I suspected that on this day, and I said it to you. Be careful. This market can get back to that 18-day average. Go back to my YouTube and you'll see. Bitcoin is still bullish. You have a fully embedded reading. You don't fight those, but you don't buy over Bollinger Bands. You get another opportunity. So until it's lost, I think the pros are still buying. They could be looking for the upper band again. They'll come out, in my opinion, if your red line closes under 80. And I go into it in my subscriber videos, exact numbers. I don't give you exact here. Because this is a public video, whether you know it or not, we're regulated in a certain way where I can talk generalities. I can't tell you buy here, I want you to sell there. I can do that in my private videos. Private being they're not available to the public, they're available to my subscribers. You can go to our website, under the word research, you find out all about that. The difference between the Oct Brent, I have this spelled wrong, October. October Brent and WTI. I better fix that and I'll do it right after this. You can see you were under the 18-day, you're back over. I'm looking for it to get back to it. I think it's just playing a game back and forth right here. And I say that because if we take a look at the charts, you're in a pipe. A pipe is when the Bollinger Bands narrow in dramatically. And this is the October Brent. And you try to break out to the upside like you did today, you fall back immediately. You're down 50 points. This is how you look going home. Looks pretty good. Should be challenging the upper Bollinger Band. Instead, it falls right back. It will frustrate the heck out of you. The same is going on in September WTI. Actually, this is October. I'm looking. I've already made the change and I screwed up today. And this market too stuck its head up and it's falling right back down. I don't like what I'm seeing in these charts. I hate trading in pipes. Be careful. Gasoline, this is still September. The trend is still down. All you did from getting underneath the Bollinger Band is get back to my line in the sand. And again, you had a bit of follow through here, but not enough where I think it's worth putting money at risk. The bands are too tight. Natural gas, different. Boy, did it explode to the upside. Markets are very concerned here that what they're seeing at this point is hot weather coming back for the month of August, so we'll see what that does. Now, the news of the day. Factory order is going to come out tomorrow morning at 9. They're looking for data up 5%. That'd be a great number. I hope they get it. The New York ISM number, well, that's going to come out at 8:45. You know, eventually you got to get this number back over 50 to start showing expansion. The ICSC and Red Book groups of retail sales, they'll come out at 6:45 and 7:55. They have not been overly strong. They've improved, but they haven't been stellar. U.S. Treasury's going to, in fact, today it announced that it's going to do for the second half of the year, borrowing of $2 trillion. Hey, what's a trillion here or there? And these are the numbers for Wednesday's API report. You might want to write that down. Basically, what they're looking for is about a 2 million barrel draw net. Not a very big number. And what's hurting the market is refinery capacity. There's just no need. You don't have enough airplanes going. Cars traveling, yeah, but not the numbers that we used to have. So the refineries are operating less, and that hurts demand for the market. We talk about this in great detail in the writings that we do. Now, I don't know if you're aware of it. We write on Sunday night too. We write on Saturday. So we're throwing research. Admittedly, it's not as heavy as during the day and the evening. Like right now, my staff is still writing. They'll be putting stories out and so on throughout the day in our news and our platforms, and they can also be emailed to you. If you haven't seen what we do and what we write on, we're commodity traders that write for commodity people, both speculators, hedgers, arbitrators, all through that. If you'd like to see what we do and you haven't seen it before, take advantage of it. Take a look at it. All you need to do is either give us a call. We got our phone systems finally fixed today. It's only been a month. Try to get people out in this COVID thing. It's not easy. And you can go to our website, sign up under free offers. You'll find it right there. I'm Ira. You have a great day, and I will talk to you all tomorrow. Take care.